Welcome to financial accounting revision. So together we are going to normalize the normal. So guys, want to revise the paper that you wrote last time. So I want to do a revision on that paper. So I'll start with the easiest questions. Okay guys, number one question, the first question, it was sales tax. But before we look at the sales tax, do you remember the business equation? You remember the business equation, right? On business equation, we say what? Opening capital. When you start your business, you start with the opening capital. You add what? What do you add? You add the profit that you have made, right? The profit for the whole year. So this is the profit for the year, or some they call it the net profit. Opening capital. So this is the capital that have been introduced into the business. You then add the profit that you have made. Then you also add, if you have the additional what? Additional capital, or we call it the capital introduced, right? This is the capital that has been invested, the amount that has been invested during the year. You also less the what? You also less the drawings for the year. Then the balance that you get is called the closing capital, or we call it the closing net assets. Opening capital or opening net assets plus the profit. The reason why I'm adding the profit because it is a gain. So it increases our capital. Then we also add the additional capital. If we make drawings, if there are goods that have been taken for personal use, or we say it might be the cash that has been taken by the owner or by the sole trader for personal use, we remove, we deduct. But you have to pay attention to the dates, number one. Number two, also read the question carefully and see whether the drawings is per year or is per month. If you have been given the drawings per month, you multiply by 12, you understand? If it's per week, you multiply how many weeks do we have per year? We have 52. You multiply by 52, you then get the closing capital, right? So this is the formula for the business equation. From our paper, I saw a question where you were supposed to give the correct equation, right? This is the equation. And what about the accounting equation? Accounting equation, we know this assets is equals to capital plus liabilities. You start your business with capital plus the liabilities that you get, because they say normally people they end up borrowing money. So because the rational human being is not stopping watching animal, right? So you start with the capital plus the liability, you combine the two, you acquire assets, then you operate your business. Right. So guys, looking at this question, I'm going to do multiple choice questions. Multiple choice questions. Multiple choice questions. Alright, I think it's best. Anyway, let's start with number one. So let's just follow the order. Number one, sales tax. Number one, sales tax. So number one, sales tax. Right. Sales tax, they're saying the following information, the following sales tax account has been provided by J for the quarter ended 30 June 2009. The account was prepared by who? By an inexperienced bookkeeper, they say by a trainee. So these people, they will make errors. Maybe they'll be doing guesswork when they prepare the account, or maybe there are some of the things that they won't be sure about. So, but what you have to understand is, number one, a sales tax is an indirect tax. You can be given a question with a theory questions in the exam. Then they'll say which of the following is true about sales tax. What you have to understand is sales tax is indirect tax. It's not direct. Just imagine you buy a product from a supermarket. They won't say pay us this amount plus the tax. They won't mention that. They'll just say our product is costing $2,000, but you pay $2,000. Just know that the amount that you pay, it will be inclusive of the tax. It will be including the tax. You understand? So we are saying sales tax number 1 is indirect. Number 2, this is the amount that has been charged or that has been collected by the business on behalf of the tax authorities. So the amount that you get is not yours. It belongs to what? To the tax authorities. You understand? Therefore, it's a liability. If you remember very well from the PELs, we said that liabilities, they do have a what? They do have a credit balance, right? Looking at my PELs here, the liabilities, purchases, expenses, and assets, they are represented by a debit, right? Revenue, liabilities, and share capital, they are represented by a credit, right? So, following this, I'll prepare my sales tax account. The trainee made some errors. CRDR. Looking at the question, the trainee got how much? 162.45. What are you required to do? They are saying what is the correct sales tax balance for the quarter ended. So since the trainee, since the bookkeeper has been making errors, this balance is not correct. We want to calculate our own closing balance. You follow, right? Because the bookkeeper made errors. So the BD is supposed to be on the credit side because it is a liability. You understand? So let's correct the bookkeeper, guys. So how can you say the amount owing to the tax authorities, then you record it on the debit side? All liabilities are represented by a credit, right? So 11,450 on the credit side. Right, let me start by solving all the amounts that are on the debit. Then lastly, all the amounts that are on the credit. What about the sales? So there is a sales tax element. Remember what we did when we calculated the sales, when we were calculating sales tax. We say on sales, you say the percentage multiplied by the sales, you remember? So this has been done for you already. So you are not multiplying. They are saying the sales tax element they are getting from the sales. It's what? 258,400. But is it correct to record it on the debit side? So it's not correct because remember the sales. Remember your PELs, the R for revenue. All revenues, the incomes like the sales, they do have a credit side. Therefore, the sales tax element should be on the credit side, right? Sales tax element for sales. So for sales, that's 258,400. They've multiplied already with the sales. Like this is the sales tax account. So this is called what? This is also known as the output tax. Those some of the questions they will require you to prepare sales tax account. So don't think that we just record sales here. It's the percentage of tax multiplied by the sales. You understand? So they've multiplied already. That's why they wrote in brackets. That is the sales tax element, not the total sales. You understand? What about what about the bank? Payment on account to tax authorities. We paid them. Where is our balance? Our balance BD is on which side? Is on the credit side. You follow? So when you make a payment, it means the balance is to reduce. Remember my example. This year, guys, I'm using this example. This is the example that I'm using this year for people to understand the debit and the credit side. I'm saying that if you have your BD here of 100 on the credit side, if you record 20 here, what will be the total? The total, thank you, it will be 120. So because it is on the same side. So the total, it will be 120, CD 120 like this, right? What about if we do like this? If I record 20 on the opposite side, what is my balance? My balance, I have BD 100, then I have recorded 20 here. What will be the balance? 80, right? You agree with me? Yes. It will be 80, it will not be 120. You can prove that by closing off your account. There is a shortfall of 80 here, CD. The CD will be the what? Will be the BD, right? So the balance is now 80 because I've recorded the amount on the opposite side. Right, thank you. Looking at the sales tax account, if you look at this, our balance is on the credit side. Then reading the information, they are saying there is a payment of 9,000. So guys, if you pay, your liability will decrease. So if we record on the credit side, it won't decrease, we'll be increasing it, right? So it is supposed to be on the opposite side, right? The bank, this is the payment made, right? So it's on the opposite side of the BD because we made the payment. So our liability is to reduce. Right, we are left with the purchases and the purchase returns. Common sense here, if the sales are on the credit side, the purchases will be on the opposite side. The sales tax element, this is the input tax that we are collecting for the purchases, right? Purchases, they are represented by debit. Therefore, the tax that we collect, it will also be on the debit. So 116 what? 280. Common sense, guys. Purchases, if they are on this side, what about the returns? They can't be on the same side with the purchases. Purchases here, purchases, returns on the opposite side, which is 23, 25. You close off your account. If you do the number crunching exercise, what do you get? Right. So looking at this, the credit side exceeds the debit. You can also confirm.
Correct.
Yes. Thank you. 146,895. This is the correct balance CD. Remember what I said in the exam. When you prepare the account, your account must end with what? Your account must end with what? The BD, right? If they will ask you in the exam, I don't know about this question. Are you seeing? Look at the question A, B, C, D. We have 146. Oh, this question is very easy. In the final, they won't present it like that. You'll be given 146.85 credit, the other one 146.85 debit. So when they say what is the correct balance, in the exam they are talking about the balance BD, the opening balance. So my CD is on this side. If the CD is on this side, the BD will be on the what? Opposite side. So we are saying we have closed off our account with this balance. When we open the other account, the new balance will be 146,895. If your CD is on this side, the BD will be on the opposite side, right? So the correct balance, the BD. If they say what is the balance, they are talking about the BD, the opening balance. So this is the balance, and it is on which side? Credit side. Easy sum. Easy peasy lemon squeeze, right? We move on to number 2. Number 2. Right. Which of the following are advantages of integrated accounting system? Integrated accounting system, we have the systems, guys. Is it correct, guys? I'm sure you understand these things. Speedier processing, same access rights for personnel, reduce duplication of work, more up-to-date management information. Guys, especially if you did BT, you should be able to answer this one. Integrated accounting system, speedier processing, right? What about same access rights for all personnel? That's wrong. You can't say we have same access right. So number 2 is incorrect. So what about reduced duplication? Correct. More up-to-date management information? Correct. So 1, 3, and 4 is the correct answer. So which is what? B is the correct answer, right? Move on to the next question. Right, number 3, these are non-current assets. The depreciation charge for the year should be 49.60, right? Guys, on this question, someone would just say, don't be too lazy to calculate, right? You have to prove that, is it 49.60 or it's not? Let's read the question. We are given the cost of 320 and the accumulated depreciation of 115,200, right? Then they're saying the company depreciate plant and machinery at 20% per annum using what? Yes, thank you, using reducing balancing method. Guys, we do have 2 methods. Either you use straight line method or we use what? Reducing balancing method. So they are saying they are using reducing. Reducing is also known as what? In the exam, they might say, can you calculate depreciation 20% per annum using, they'll say, using diminishing method. Then you say, what's diminishing? You understand? So diminishing is also the same as reducing, balancing. You follow, right? So don't be surprised if they say diminishing. They are talking about reducing, balancing method. So here is what? 20%. We said if it's reducing, you will be multiplying with the carrying amount. You understand? If it's straight line is like this. That means the depreciation will be the same every year, right? But if it's reducing, the depreciation will be what? Decreasing. So therefore, you multiply with the carrying amount. What's carrying amount? This is the same as the one that you used to call net book value. That's the carrying amount, right? How do you get the carrying amount? When you're looking at the carrying amount, we are looking at the value of the asset. Like now. Like yes, when you purchased the asset, looking at the question, it was worth 320,000, right? But it has depreciated in total. The accumulated, like in total, it has lost its value by this amount. So when we say let's multiply with the carrying, we are now looking at the value of the asset like now, not before, not when it was new. If there's a straight line, you still multiply with the 320, the cost. But if it's carrying, what is the remaining value of the asset? The asset is no longer worth 320 because it has depreciated by 115,200. Meaning that the carrying amount of the asset is how much? The carrying amount of the asset is 204,800. If you multiply with 20%, that will be 4960. And this statement is true. Right, let's push boundaries number 4. Number 4. Right, someone said it's not easy when you're the one who's doing it. Right. When a trade discount is received from a supplier, the double entry is as follows. Discount received, debit. Payables, credits. Anyone to try on this one? When trade discount is received,
it's false, yeah.
When a trade discount is received from a supplier, the double entry is as follows. Anyone to try? Kai, are you willing to try? Bruce, is number 4 correct? When a trade is false, right? Why? Why is it false?
Because we do not record trade discount.
Thank you very much. We do not record the trade discount in the books of accounts. Trade discount is like buy 3. Trade discount is like buy 3 and get 1 for free. You understand? Trade discount is given when you buy in bulk. So you have received 1 for free. You have not incurred any cost for this one. You understand? Therefore, it's not recorded in the books. You understand? Here is an example. Guys, you know what people do when they are selling a product? They will say the product is worth $20, right? You know how Zimbabweans behave, especially they don't be willing to pay the full amount, right? someone is selling the product. Are you following? Someone is selling the product at 20, then Zimbabwe will be like, I have 18. You understand? And when someone is selling the product at 30, what would you say? What do normal people say? I have 25. Yes, people are trying to minimize costs. So, guys, are you seeing this? If someone is selling the product at 30, then you actually paid how much? 25. This is the list price, you follow. The price of the product was 30, but you actually paid what? 25. In the books, are you seeing this? You tell people that I have paid what? 25. This is the cost that you are going to record in the box. So when you prepare a journal entry, you prepare a journal entry for the $25, not for the 5. You understand? The trade discount, we won't even know that there was a discount or what. There's buy 3 and get 1 for free. So trade discount is not recorded in the books of accounts. So but what is recorded in the books? It is the cash discount, or we call it the settlement discount. Whereby you have purchased the goods on credit, then the suppliers are encouraging you to pay quickly. You understand? So then they will say, if you pay within 10 days, yes, you're supposed to pay within after 30 or after 2 months. But if you pay within 10 days, you attract a discount. Then we prepare journal entry for that one. Let's move on. Guys, number 5, errors. People, they don't like errors. So do you want us to start with this one, guys? I don't know. Or should we follow the order? It's best if we follow the order, right? So guys, follow this one step by step. This is what I always tell people in the exam. You will be given errors and suspense. And those questions, it is probable or slightly that you won't answer the question with like much certainty, whereby you will be 100% confident about the errors. Because the errors they'll give you any error. I can even create any question which has an error. So for you to be able to understand this one, guys, the errors, you don't need to claim. You just need to follow. Like to know the theory, the types of errors that you have, and to know your journal entries. You understand? So looking at this question, they're saying Robert's trial balance was extracted. The total debit was what? 208. The 208,462. Credit 208,642. Looking at this, are you seeing that the trial balance is not agreeing? When the trial balance doesn't agree, we prepare or we open a suspense account. Suspense account is only opened when the trial balance fails to agree. You understand? So guys, looking at this, the difference, the shortfall, is it on the debit or on the credit? The shortfall. Credit side is greater, right? Mm-hmm. So there is a shortfall on the credit side, and by how much? If you less that amount, there is a difference of 180, right? You understand? So this is what you do, guys. Allow me to open the suspense account. Allow me to open the suspense account. This is my account. The debit is on the balance is on the debit, 180 BD. It is on the debit, right? Right. When you correct all the errors, the suspense account balance should be nil. You follow? But if you look at your question, we have A, B, C, D, we still have these differences. This means that, yes, they might have discovered the errors, but not all of the errors. Because if they have discovered, oh, the balance was supposed to be nil. You understand? Right. They are saying he opened a suspense account while he checked the entries. He then found that, so those are the errors that we have. We have 2 errors. And we want to correct those errors. Guys, this question is very easy. So, let's follow. Right. I will finish this one after I correct all the errors. So this is what you do when I see the word suspense. I prepare 3 columns. The first one is, I write this, should do, did you do, then you correct. So this is what I do on errors and suspense. Should do, did you do, correct. So on should do, we are saying, what were you supposed to do? Or what was I supposed to do? Did you do? What did you actually do? Then we compare, we correct. You understand? Should you do? What was I supposed to do? What did I actually do? What about on correction? You follow. So let's read note number 1. Guys, this is easy stuff. Note number 1, they are saying a cash sale for how much? Let's read. A cash sale for how much? For 50 was what? Now let's hang on there, guys. Was debited. They are now telling us what they did. So let's focus on what they were supposed to do. So a cash sale for 50. Before I read to understand what they did, so I need to know what was supposed to be done in the books. You understand? So a cash sale of 50. What do you debit? What do you credit? Guys, cash sales, primary school thing. What do you debit? Cash sales or primary school thing? Anyone to help us? Yes. Tell us. It's primary school thing, easy stuff. What do you debit? What do you credit?
Debit cash.
Yes, you debit cash and you credit what?
Sales.
You credit sales. You understand? Credit the giver. Sales are always on the credit side. And if you make a sale, you receive cash. You understand? This is the journal entry. They were supposed to do this. Now let's read on to know what they did. Then they are saying it was debited to what? To cash account. Oh my God. So on the debit, they did it correctly. Yes, they did it correctly. So they are saying they debited cash, which is correct. Well done. Whoever was preparing this. Now they are saying, but no entry was made in the what? Sales account. Guys, can you see? They were supposed on the should do, they were supposed to credit the sales. But they are saying on the credit side, they are saying what? No what? Entry. They didn't record anything here. So if you look at this, what they did is their trial balance agreeing, is their journal entry agreeing on the debit and credit. Is it agreeing? Is the debit and credit agreeing? So it means there is a shortfall on which side? That shortfall will be represented by what? By suspense. You understand? Remember what I said, we only open the suspense account when the trial balance fails to what? To agree. So that's why I have opened the suspense here. Now when we correct, guys, let's look on the did do here. Cash, are you agreeing with me that it was done correctly? So allow me to put a tick. On the correct side, I don't want to see cash. Because you cannot correct what has been done correctly. You understand? So now, when we correct, we post. When you post suspense, here it is on the credit side. When you post it, it will be on the opposite side. So here it is on this side. When I post, it goes on the debit. Step by step, guys. Here. Now, I'm not going to correct cash. Then you go back on the should do. What was not recorded here, we want to correct. Are you seeing that cash was never entered? Sorry, the sales. So let's record. They were supposed to record the sales on the credit, but they did not do so. So let's record the sales on this side. Now we are left with note number 2. Step by step, baby steps, you surely get there. Right, number 2, the opening inventory of 1.2 was omitted from where? Did they say from the books? Guys, I want you to understand this. If they say it was omitted from the books, it means it was not recorded at all. It means it was not recorded on the debit side and on the credit side. But the trial balance will still agree. But this question is saying it was omitted from the TB. What is trial balance? Trial balance is a list of debit and credit balances that are extracted from the ledger account, right? Right, so trial balance is a list of debit and credit. So guys, you ask yourself a question that when we have opening inventory on the debit side, in the trial balance, is it recorded on the debit or on the credit? The opening inventory, is it recorded on the debit or on the credit? Guys, opening inventory is classified as a current asset, and according to PELS, all assets, they are represented by a debit, right? So on the should do, they were supposed to recognize opening inventory of how much? Opening inventory on which side? In the TB, in the trial balance, it was supposed to be on the debit side. You understand? Our opening inventory of how much? 1,200. It was supposed to be on the debit. But on the did do, what did they do? They omitted it. On the debit, they did not record. Do you follow? Do you understand? Since they did not record on the debit, it means there is a shortfall on the debit. By how much on the debit? Remember what we did here. The sales were not recorded, so we did recognize what? The suspense. You understand, right? So allow me to write what? Suspense here, since there was a shortfall here. Now when you correct, when you post, guys, when you post, remember what I said? If the suspense is on the debit, when you post, it will be on which side? Credit, right? Then go back to should do. They were supposed to recognize opening on debit, right? So now we are recognizing it on the debit. 1.2. We are done with these journal entries. Now I'm now closing off the suspense account. So now we are now focusing on the correction. On the correct. Suspense is on which side? Now we are recording the suspense account. Suspense is on the debit. You go on what? Debit here, 50 here, right? Suspense on the second one. Suspense is on which side? Credit. You go on the credit side. You write 1.2, right? Then you calculate the balance CD. Let's close off the account. Let's close off 1.2 in the total. 1.2. There is a shortfall of how much? 1.2, you less 180, you less 50. Sorry? Okay. We are getting what? 970, right? Yes, I'm getting 970. The balance CD here, right? Then when you get the balance CD, remember what I said? Every account, guys, when you are doing financial accounting, every account must end with the BD, right? If the CD is here, the BD will be here. You understand? 970 here. So this is what you do. The BD of 970 is on which side? Is on the credit side. So that means the correct answer there is D. Yes, it's D. So these are the errors. Yes, you can ask.
My debit is where did we get that opening balance of 180 from?
Okay, when we started looking at your question, the question clearly stated that the total debit was 204. Sorry, it was 208. 462, right? Then the credit, it was 208642. This indicates that the trial balance was not agreeing. It was not balancing. So it wasn't equal, the debit and the credit. So then we saw that there is a shortfall on which side? The credit side was greater than the debit side. Meaning that on the debit, there was a shortfall of that difference of 180. So that's why I did recognize BD on the debit side.
Alright, it's okay, I understand now.
Alright. Okay, thank you. Moving on to the next question, number 6. Now this one, these are errors as well, but this one is easy. It's not that difficult. So we are saying after Edward prepared his draft accounts, he discovered that he had incorrectly classified an item of revenue expenditure as capital expenditure. Capital expenditure. Then they are saying when the error is corrected. Now guys, this question is very tricky. Some of the answers, so don't get confused. So sometimes the correct answer, it might be increase. You understand? Some of the answer, it might be decrease. It depends with the question. On this one, they are saying when it is corrected. So either they will say what will be the effect, or they will say when the error is corrected. So now you start with the effect or the result. What will happen if that error, if the error occurred? Right? They are saying he treated an item of revenue expenditure as what? Capital expenditure. Let's see. Treating revenue expenditure as what? Capital expenditure. If you want to get this right, the first thing, be specific. What do we mean by revenue expenditure? We are talking about what? Expenses. So capital expenditure, this is what? Non-what? Current assets. You follow, right? So we are saying expenses were treated as what? Assets. Then they are saying okay, we are looking at the net profit and the capital. You understand? Right, so I want to explain this. We have, they want the answer for net profit and the answer for what? For capital. Guys, what does capital word mean? It means what? Investment, you understand? So, in other words, we are talking about our non-what? Current assets, right? You follow? So, I will start with the effect. You can't just give us the correction without knowing the effect first. This is your first step. If there is an error, there is this error, guys. There is this error, expenses were treated as assets. Right? So this is an error. What will be the effect or what will be the result? Guys, there is an expense. Imagine there is an expense, e.g., imagine 1,000 expense was not treated as expense. So it means in the profit or loss it's not there. You understand? There is a shortfall on the expenses. So guys, if you omit this one or if you don't record on the expenses, what will happen to the profit, the effect? Let's start with the effect. Yes, thank you. The profit will what? Will increase because you have not recorded that expense in the expenses. Meaning that there is a shortfall on the expenses. The profits will what? They will increase. You understand? It was not recorded in expenses, therefore the profits will increase. It was recorded where? In the non-current what? Assets. So what will happen to the non-current assets? Thank you. They will also what? Increase. This is the effect. You start with the effect. If they say give us the effect of the result, the answer will be what? Will be C. If they say give us the effect. But the question they are saying when the error is what? Corrected. So this is happening because of the error. So guys, let's correct the error. So on the correction side, when you correct, so now correction, let's do corrections. When you correct, you don't need to think twice. Just know that it is the opposite. So if it increased here, when you correct it, what? It decreased. This one increased. When you correct it, what? The correct answer is easy stuff. Yes, this one was numbered correctly. Number 7. Number 7 what? Now we are on the business equation, primary school stuff. Right, number 7. What were the drawings for the year? Looking at the information, guys, this is business what? Equation. So this is business equation, right? Business equation. On the business equation, we did that one. So this is my opening capital plus profits plus additional capital less drawings. You get the closing what? Capital, right? Now they want the drawings. So you don't, if you're given the amounts, you don't make this one the subject of the formula. Guys, you end up confusing yourself, right? So if they just say give us the drawings, this will be your X. So I'm calculating drawings. So just leave it as D or X, you understand? What is the opening capital? Look at the dates. Pay attention to the dates. Dates are very important. At 31st of May 2008, the capital was this. That was the capital. This is the opening, right? Yes, looking at the dates is the opening. 114,867. Plus what is the profit for the year? Or they call it the net profit. The profit is 25,764, right? Plus, do we have the capital that was introduced during the year? If they say there is capital introduced, it means it's additional capital, but we don't have. So I will write my formula as it is, just in case in the exam, if you're given the additional capital, you know that you add it here. Let's what? The drawings. Now I'm calculating the drawings, so my X is representing the drawings. Equal to the closing capital, what do you have? 153, 153. Alright? Before you say this closes to the other side, just add here, right? 144,867 plus. Right, I'm getting 170,631. Minus X is equal to 153, 153. Now, what is the easiest thing to do? I want my X, but here my X is negative, right? So what if you do this? If this comes here, this comes here, right? 170,631. Here it will be negative, it crosses the equal sign. Here it will be X, and this will be married together. And what you get, right, 17,478, I'm getting this amount for drawings. The correct answer is B. Number 8, bank reconciliation. Bank reconciliation. Now, on bank reconciliation, so guys, remember what I always say, I want the revision to be effective. We cover all the concepts, right? So last time I also looked at the bank reconciliation. They want the balance as per cash book. Looking at this question, they are saying the following bank reconciliation is being prepared by whom? by bookkeeper. So these people, they'll be making errors. You understand? They'll be making errors. So can we correct the bookkeeper? So if you prepare your bank record, so guys, so normally a business prepares a cash book account which has an opening balance that represents the amount that is in the bank, right? So we also we end up comparing our cash book balance with the one that is in the bank. So we compare with the one that we get as per what? As per bank statement. This is the amount that you can get from, you confirm the balance from the bank, right? You obtain the bank statement and they'll give you the statement which shows all the transactions that you have made. So this will be the balance as per bank statement, the one that I'm seeing from the bank. So they're saying in the bank you have this amount. But we have to adjust all the what? The timing differences, right? So you start with the as per balance, as per bank statement. If you confirm from the bank. But on this question we have in what? Overdraft. Number one problem that I'm seeing, the bookkeeper treated the overdraft as positive. The bookkeeper treated as if the company has the money in the bank, of which we don't have. This is negative, so 47,500 is supposed to be negative here. That's number one thing you have to know. Number two, the lodgements, guys. When you have the lodgements or the deposits, so we are accounting for all the timing difference. Someone can send you money now, and you can try to request the balance, and you have seen that it has not yet reflected. If someone said, I have deposited money into your account, my question is, what will happen to your balance? Will your balance increase or decrease? Yes? It will increase, thank you. The balance will increase. Therefore, we add the what? The lodgements or the what? The deposits. In accounting, it doesn't matter whether it has not yet reflected. The fact that it is probable or it is certain that it is going to reflect is just a matter of time. We say, let's just add it. In accounting, we say, when you have $10, then you are very confident or you are very certain that you are going to receive $30 today. In other words, we say you have 40, not 10. That's what you are saying, timing difference. So you add the lodgements, you add 45,700. The unpresented checks, guys, we list the unpresented checks not to add them. When we say the check is unpresented, it means it has not yet been presented at the bank. But when it's presented there, your balance is going to decrease because the unpresented, we are talking about the amount that has been withdrawn. These are withdrawals. So they reduce the money that is in your bank. So 2.4 you less. Are you seeing that? I'm preparing my own account. I'm not following what the bookkeeper did. It was all wrong. So when you correct, you get the balance as per what? As per cash book. The correct balance, not the one that the bookkeeper gave us. Now, most people, they will do this correctly on their paper when they are doing calculation. But now they will fail to give us the correct answer. Like if you look at this, we have 9,800. Yes, I like this question. This is exactly how they do in the final exam. You'll be given two same answers, the one saying positive, the other one overdraft. Overdraft and positive, same amount. So you have to do it right on your adding machine. On your calculator, this is 40 negative. This is not 47,500. Don't say 47,500. No, it's negative 47,500. So on my adding machine, I'll start with the negative sign. First, as it is, guys, negative 47,500 as it is on my adding machine. This is positive. Then I'll say positive 45,700. On my adding machine, this is negative 2.4. On my adding machine, I am getting negative 4.2. So negative, allow me to write in brackets. I'm getting negative 4.2. So if it's negative 4.2, the question is, do we have money in the bank or we don't have money? We don't have money, we owe them, right? So guys, this is a what? Overdraft. Yes, this is an overdraft, meaning that the correct answer is what? B is the correct answer. But just know that in the exam, they might not say overdraft. They might say credit or what? Debit. Yes, they will say that. So guys, if it's an overdraft, you remember your what? Yes, this, you must remember this. All the liabilities, they are represented by a credit. So it's called overdraft, or we say credit. No guesswork in the exam, please. Move on to the next question. Number 9, I do remember that people like the provisions and the contingencies. Yes, people, they like the provisions and the contingencies. Right. Let's read this question. Let's read the question now. They are saying what? They are saying, in late April 2009, a limited liability company was being sued. So guys, if you are doing the provisions and contingencies, just know that you are the company. You are not the what? You are not the customer or the employee, right? You are the company. They are saying a limited liability company was being sued by an ex-employee for wrongful dismissal. About these issues, guys, we are the accountants. We don't know whether who is going to win the case. So we need the help from the lawyers. We need help from the legal advisors, or they will say solicitor, right? So they are saying folk has been advised that the claim is 95% likely to succeed, and that damages of 140 will be payable if the claim doesn't succeed. This should be how should this matter be treated? Anyone to try? Remember what we said. Number 1, you are the company. So you look at the company side. And on this topic, we said we'll be measuring the probability of what? We will be measuring the probability of losing the case. You understand? If the probability of losing is high, or we say if it's probable, we say if it's likely, or we say if it's above what? 50%. Then we recognize in the books it's a what? Yes, it's a provision. And the provision will be recognized in the financial statements, right? If the probability of losing the case is low, or the opposite of probable, if it's not that high, you say it's possible that it might. Okay? If it's possible, or if it's unlikely, or if it's less than what? If it's less than 50%, you follow? Then it will be a what? It will be a contingent liability. And we don't recognize, right? Guys, we don't recognize in the FS. We don't recognize in the financial statements, but what do? We disclose by a note, right? But if it's less than 5%, guys, if the chance of losing is just less than 5%, it's nothing. We say it's remote. This is remote. So if something is remote, what do? You just ignore. So let's look at this. Guys, measure the probability of losing, not of winning. You understand? So guys, they are saying, we are the company F has been advised that the claim is 95% likely to succeed. The claim. So even sometimes if you get confused, you can even write the employee. Yes, this is the company versus what? The employee. Even if you get confused, you can try by writing employee in order to understand that much. Then you write winning, losing. Looking at the employee, what is the probability of the employee winning the case? They are saying it is likely, they are saying the claim is 95% likely to, the claim that the employee is making is 95% likely to succeed. 95% of winning, meaning to the employee in terms of losing is what? 5%. To the employee. Now we are back to the company. The probability of the company winning. So guys, what we have in life is 100%. You share 100%. If the chance of the employee winning the case is 95%, meaning for us to win is what is the remainder, which is what? 5%. If the employee is 95% of winning, it means we have 5% of winning. We share the 100%. Meaning for us to lose, the probability of us losing is what percent? 95, it's very high. It's a what? Provision. Which is A is the correct answer. So guys, the amount that the employee is claiming, so there is a high chance that we will lose that full amount, which is 140, not 133. It doesn't make sense to say 95% of this, then you get this amount. You understand? The correct answer is A. So don't assume, guys. In the exam, you don't need to assume. To just say, I think of winning 75, meaning the remainder is 5% remote. No. Don't assume. Guys, make sure you assess, you analyze, you understand? You have to analyze, like what I did. If it's confusing, if it's tricky, then you try to look even on the side of the employee, then
I think that's the best way.
That's the best way, right? Yes. Thank you. Number 10. Guys, they didn't take this over and over again. It's been long. Guys, remember, I don't know how many times I've opened the expense account, in the income account. On this question, what you need to know is, are you the one who is paying rent or you're the one who is receiving rent? What amount of rent income? It means we are receiving the rent. So this is why what I always tell people that when you have accruals and prepayment, when you want to open the account, you follow your bills first. Follow your bills first, right? Right, so you start, as for me guys, I don't just start by preparing the income account, I start with the expense account. You follow, right? Then you follow your bills very well.
The income account is tricky.
Yes, the income account is tricky, you don't follow bills. So the expense, you follow bills. So I start with the expense, then on the income account, I will do the opposite. So expense, you start with the expense. Expense, you follow bills, you use your common sense, you use your double entry, debit, credit here. So when you make payments in advance, what do you debit, what do you credit? Like when we pay in advance, guys, a prepayment is an asset, you understand? So the prepaid BD, what do we have here? We have advance. They are using the word advance. So this is why I always say prepaid or advance, you understand? BD, it goes on the debit side because it's a what? Asset. But if you have an owing, here they are using the word area. If you have owing or area, BD, according to the PELS, all liabilities, they are represented by credit. So the BD, it will be on the credit. Now when you want their closing balances, obviously it will be the opposite. Opposite side of this, it will be area CD here. Opposite of this, it will be what? It will be advanced CD here. Right? This is the account, right? What about the bank and the profit or loss? Bank always follow prepaid BD. Bank here, when it's the expense account, we'll be talking about the amount that you have what? Paid, right? The amount paid. Then here, this is the P&L, the amount what? Charge. You follow that? So this is the amount that has been paid, this is the amount that has been charged. For example, you can be charged 12,000 per year, like maybe the rent is 1,000 per year, meaning by 12, it will be 12,000 per year, right? But it doesn't mean if your charge is 12,000, it doesn't mean you have paid 12,000. Maybe you paid 15,000, meaning that you paid more than what you have charged. If you pay more, it means there's an extra amount in advance. You fall. If you pay less, you have an owing. So now when you prepare the income account is the opposite of expense account. This amount that has been paid, the prepaid, if it is the income account, just see yourself, e.g., as a what? As a landlord. Imagine now, guys, you are in the month of October, right? You are the landlord. You are receiving rent from the tenants. If they pay you in advance, when in the month of October, imagine if they have paid for November. You have received the money for November, for December, and for January. For next year, you are the landlord. The question is, who owes who? Are you saying that it is the landlord that owes? Yes, the tenants. You understand? So therefore, those amounts that have been paid in advance are the owings. So that's what we are saying. So here is the prepaid BD here. It's an owing. So even, don't confuse yourself in the exam, just know that is the opposite. This balance there, you copy here, you paste it here. Allow me to copy the prepaid BD and the bank as well. Here, X. But obviously this is the income, we are not saying amount paid. This is the amount what? Received. Right. Here on the opposite side, area BD and the profit or loss, right? The amount that you charged them. So guys, XX here, these are the CD, prepaid CD, the CD on the opposite, area CD on the opposite. So this is the first thing that you do. Right, so now then you put the amounts. Now on this question, follow dates. Follow the dates, please. Follow the dates. Make sure you follow the dates. This is the BD. This is 2008. This is 2009. So these are opening balances. So you start like with the advance. Let me start with the advance. 37,900 is my BD. 25,250 is my CD. This is what I do. You need to avoid making errors. So 37,900 for prepaid. So for prepaid or advance, and 25,250. 25,250. That's my CD, right? I'm done with the advance. Then the area, 31 BD, 12,250 CD. Area, 31 BD, 12,250 CD. We are done with this. Let's read what you are going to do. What amount of rent income should appear in what? Income statement, guys. They will say income statement, or they would say profit or loss is the same. You remember, like, we have financial position, we used to call it balance sheet. So balance sheet and financial position is the same, right? Income statement or profit or loss statement is the same. So they want this, which amount? This. We are calculating for this amount. So obviously you'll be given the bank. Let's read. A company lets out a number. We are renting. We are letting out. The total rent received, we have received 617. That one goes into the bank. Amount received 617 here. Then you calculate the balance here. Let's say 900, 617, 12,250, 667, 150, 667, 150, less than 1,000, less 25,250. We get 16,900, right? Done with this one. Allow me to skip number 11. Sorry guys, Number 11 is out of syllabus. Partnership business, sorry.
That's why.
The partnership business, that's A-level stuff, it's out of syllabus. We don't do the partnerships.
Okay.
Yes, we don't do the partnership. So, okay. We don't do partnership. So, okay, we want to do up to 15, right? So, number 12 here, which of the following statement is correct? Number 12, we want the correct answer, guys. Number 12.
Can I try?
Yes, you can try. Yes, we need people who try. Yes.
I think number 12, the answer should
Number 12, they're saying the answer should be B. Yes, that's correct. Let's prove. No, D is wrong. Land should be depreciated over 50 years. Guys, we don't depreciate land, right? We don't depreciate land. Yes, we depreciate all assets, all non-current assets except for land. So the assets that are depreciated, they lose value every year. They'll be decreasing. In the case, you can even say after so many years they will have a new value. But land is not depreciated. Right? I've explained about the provisions and contingencies. Guys, all the contingencies, they are not recognized in the financial statements, right? Contingent liability should always, number one, the word always. Number two, provided, should not be provided, right? They are not recognized, but they are disclosed by a note, right? Then D, what about B? You said D, right? B is incorrect. So let's prove that A is wrong. They are saying capital expenditure on what? On research. The keyword there, on research. When you research, it is not probable that you benefit. You can research about anything and you make a loss. What is an asset? An asset is an economic resource that is controlled by an entity as a result of past events, out of which future economic benefits are expected to flow into the entity. So it must be probable that you will benefit. So if you just research are not capitalized, please. Research are expensed. They go into the profit or loss. They are expensed, they are recognized in the profit or loss as an expense. So A is wrong. The correct answer is B. Let's read it. B, dividends proposed. Guys, we have what we call the interim dividends. We have what we call proposed or declared dividends. You understand? The interim dividends are the dividends that have been paid during the year, therefore it's not a liability. You understand? We don't owe them because we have paid on the interim. But the proposed now, we have promised. If you say we have proposed dividends or we have declared dividends, it means we have made a promise. We have made a promise that we will pay you dividends. When a company declares dividends, it means that they are saying within 12 months we will pay you dividends. It means they have a what? A current what? Liability. But for us to be able to recognize as a current liability, they must be declared what? Before the what? Before the year end. If they declare before the year end, if they promise that they will pay the dividends before we have closed the books, they will recognize as a current liability. But on this one, they are saying proposed after the year end, guys. After we have closed the books, therefore, it must not be accrued. To accrue is to treat as a liability. It must not be accrued. That's correct. Because it was declared after. So therefore, it's not a liability in the books. So it will be recognized in the new year. So right. This one, it's not difficult, guys. Yes. So someone, I know people have a tendency of panicking when they see like a big question. Doesn't mean it's difficult. It's the same way I've been explaining about the interim and the good thing I've explained about the interim and about the proposed. Let's look at this. Guys, we have the ordinary shares, we have the preference shares. There are people who own the ordinary shares, those people are called ordinary shareholders, right? And the people who own the preference shares, those people are called preference shareholders. What is the difference between the two? The ordinary shareholders are the permanent owners of the company. The preference shareholders are the temporal owners. That's the difference. The ordinary shareholders doesn't mean ordinary people. You are the owners, you are the permanent owners. Just like the permanent owners versus the preference, the temporal owners. Preference shareholders are like people who have visited at your place. They are the visitors. That's why they are called preference. In terms of we prefer them first. Maybe you want to serve food. You prefer you serve the visitors first, right? You understand? So guys, but those they are paid. The dividend that they are paid is fixed. But the permanent owners, you are the owners now, the ordinary shareholders. You don't get the fixed, right? Do you understand? Yes, so we are saying, looking at the question, they are saying what are the dividends that should be included in the changes in what? Equity. So we have our equity, guys. I'm seeing social there, I'm seeing financial position there. So we need to know what's recorded in changes in equity. So about the changes in equity, guys, what is recorded in changes in equity? Guys, this is equity. Under equity, what do we record? We have the share what? Your capital, right? And like the gains, which are your premiums, the share premium. We also record what? The revaluation what? Surpluses, right? If you have assets that have gained in value, we record it there. This is key. I want you to understand the last one. The retained what? What do we mean by retained earnings? These are the profits. You understand? But when a company makes profits, they do what? Pay dividends. Do you follow? If you make a profit, guys, you pay the dividends, right? The dividends are paid from the profits that you've made, right? So we remove, where I'm saying we remove what? Dividends what? Paid. Are you seeing this? We remove the dividends paid, right? We remove some profits, then we pay the shareholders, right? So the dividends paid, they are removed from the retained earnings, from the profits. So therefore the dividends paid are recorded here. So this is our equity. So our equity can change. That's why it is called statement of changes in what? Equity. The equity can change. Like the shares can be issued. Maybe it's a rights what? Issue. It affects them. The dividends, they affect here. If they ask that they be revalued, it affects here. So they will change. The equity can change. I have a question, guys. If you promise to pay dividends, which are the proposed dividends, will your profit decrease now? It doesn't increase because they've not yet what? Paid. Meaning that the proposed dividends are not recorded in the social. Let's look at this. Right. The following information has been provided for ordinary shareholders. For ordinary, let me start with the preference, right? Let's start with the preference dividends. Preference dividends paid. They are paid fixed dividends. You look at the percentage that is attached. 20% on preference, 20% on preference, multiplied by what? 20,000. So for preference 20%, we pay them fixed dividends. I'm getting how much here? 4,000. Can you see that? Now, let's go to ordinary dividends, right? This one is given to ordinary shareholders. Now, they are saying note number one, this one they've been declared before the year end, right? 10 cents per what? Per share. So guys, we use dollars, not cents. So this will be 0.1 per what? Per share, multiplied by the number of shares they have. How many shares are given there? 200,000 shares. The 200,000, this one is not a dollar sign. Each share is worth 50 cents. These are the number of shares. So you multiply with 200,000 shares. You get what? 20,000. Why have I included ordinary dividends paid? Now, this one I'm calling them paid what? They have been declared before the year what? End. Obviously, they will be paid anytime soon, right? Do you understand? So, in total, how much do you have? Right, I'll write this to be paid soon. To be paid what? Soon. They have been declared. These ones is before